Hey real estate watchers, Andrew Finney here with some real estate news that'll make your jaw drop. The housing market is like the Incredicoaster at Disney's Cali Adventures. We're seeing builder confidence climb, pending sales jump, and mortgage rates doing their own little dance. Buckle up because we're about to dive into what all this means for you, whether you're looking to buy, sell, or just keeping an eye on the market. Ready to ride this real estate wave? Let's go. In today's video, we'll cover the latest on pending home sales, builder confidence, single family starts, and what's happening with those ever important mortgage rates. Plus, we've got a special segment on new construction versus existing homes. You won't want to miss it. For those of you who are new here, I'm Andrew Finney, a seasoned real estate professional with over a decade of experience navigating the ups and downs of the housing market. I've helped many clients make well-informed decisions, and today I'm here to break down the latest trends and data to help you do the same. Let's kick things off with the big headlines. Pending home sales have surged, showing the biggest increase since 2023. Builder confidence is on the rise despite ongoing affordability challenges. Single-family home starts are trending upward, while multifamily construction is facing some hurdles. Mortgage rates are doing a bit of a zigzag. They're up from last month, but still lower than last year. We're seeing some interesting dynamics between new construction and existing homes. Stick around as we dive deeper into each of these real estate topics. Our main story today focuses on the surprising resilience of pending home sales. According to Redfin, pending home sales jumped 2.5% month over month in September, marking the largest increase since January 2023. But that's not all. They're up 3.1% year over year, which is the biggest annual increase we've seen since May 2021. Now you might be wondering, Andrew, what's driving this surge? Well, there are a couple of key factors at play. Number one, mortgage rates. We saw rates dip at the 2-year low at the end of September. This gave buyers more purchasing power and motivated many who had been sitting on the sidelines to jump into the market. Number two, Federal Reserve action. The Fed's decision to cut interest rates in September also played a role. Some buyers rushed in, anticipating that this would lead to even lower mortgage rates. But here's where it gets interesting, and this is crucial for both buyers and sellers to understand. While pending sales are up, we're also seeing some conflicting trends. Mortgage rates have actually ticked up since that Fed decision, with a weekly average 30-year rate now sitting at 6.44%, according to Freddie Mac. Home prices are also on the rise, with the median sales price up 4.7% year over year, as reported by Redfin. What does this mean for you? Well, if you're a buyer, you might be facing slightly higher costs than you would have a month ago. The typical homebuyer's monthly payment has gone up nearly $100 in the past month. For sellers, this could be good news. The increased demand we're seeing might mean more potential buyers for your property. However, it's important to price your home realistically, as buyers are still very price sensitive in this market. Now, let's look at how this is playing out across the country. Redfin reports that pending sales are up in 34 of the 50 most populous U.S. metros, with the biggest increases in California and Portland, Oregon. This suggests that even in some of the more expensive markets, buyers are finding ways to make deals work. But, and this is a big but, we're starting to see signs that the surge might be cooling off a bit. Redfin's Homebuyer Demand Index, which measures things like home tours and other buying services, has fallen slightly from the 6-month high it hit 2 weeks ago. Mortgage purchase applications are also down 7% week over week. What's the takeaway here? The market is active, but it's also volatile. Buyers who have been waiting for the right moment might want to consider making a move, but they should also be prepared for potential rate increases. Sellers, on the other hand, might want to take advantage of this window of increased demand, while also being realistic about pricing and potentially offering incentives to attract buyers. Remember, real estate is local, so while these national trends are important, it's crucial to understand what's happening in your specific market. That's where working with a knowledgeable local agent can really make a difference. Now, let's zoom out and look at the bigger picture of the national housing market. There are several key trends we need to discuss. Builder confidence. According to the National Association of Home Builders, builder confidence increased to 43 in October, up from 41 in September. This is despite ongoing affordability challenges, which is a positive sign for the market. As Robert Dietz, NAHB's chief economist, notes, builders are feeling more optimistic about the 2025 market conditions, price cuts, and incentives. The NAHB report also reveals about 32% of builders are cutting prices, with an average reduction of 6%. Additionally, 62% of builders are using sales incentives. This suggests that while builders are confident, they're also being strategic to attract buyers in a challenging affordability environment. Single-family starts. Here's some good news for those looking at new construction. The U.S. Department of Housing and Urban Development and the U.S. Census Bureau report that single-family starts increased 2.7% to a seasonally adjusted annual rate of 1.03 million in September. Year-to-date, single-family construction is up 10.1%. This increase in supply could help ease some of the inventory constraints we've been seeing in the market. Multifamily construction is weakening. This is largely due to tight financing conditions and an ongoing rise in completed apartments. This could potentially impact rental markets in the coming months. Mortgage rates. As of October 17th, Freddie Mac reports the average 30-year fixed-rate mortgage was at 6.44%. While this is up from the 2-year low we saw in late September, it's still over a full percentage point lower than a year ago. This is a crucial context for both buyers and sellers to keep in mind. Future outlook. Many experts are suggesting that we could see mortgage rates continue to trend downward in the coming months. As Selma Hepp, chief economist at CoreLogic, states, October mortgage rates could continue the downward trend we have seen in recent weeks as the financial markets continue to price in Fed rate cuts and weakening of labor markets. However, it's important to note that rates can be volatile and are influenced by many factors. What does all of this mean for you? For homebuyers, the recent surge in pending sales shows that many buyers are finding ways to make purchases work, even in a challenging rate environment. However, with rates ticking up again, it's crucial to run the numbers carefully. Don't just focus on the purchase price. Consider your total monthly payment, including principal, interest, taxes, and homeowners insurance. Also, with more single-family homes starting construction, you might have more options in the new home market in the coming months. For sellers, the increased pending sales and builder confidence suggests that there's still strong demand out there. However, you're likely to face competition from both other resale homes and new construction. This means pricing your home correctly from the start is more important than ever. Consider working with a savvy listing agent who can provide a comprehensive market analysis, marketing plan, and help you price your home competitively. For investors, the slowdown in multifamily construction could present opportunities, especially in markets where rental demand remains high. However, it's crucial to carefully assess local market conditions as the impact can vary significantly from one area to another. For everyone, keep in mind that while national trends are important, real estate is ultimately local. What's happening in San Francisco or New York might be very different from what's occurring in smaller markets or suburban areas. This is why working with a reputable local real estate expert is so valuable. They can help you understand how these broader trends are playing out in your specific market. Lastly, let's talk about the potential for future rate cuts. While many experts are predicting rates to trend downward, it's important not to base your decisions solely on these predictions. Rates can be influenced by a wide range of factors, many of which are difficult to predict. Instead, focus on your personal financial situation and long-term goals when making real estate decisions. If you're feeling a bit overwhelmed by all of this information, don't worry. That's what I'm here for. Whether you're looking to buy, sell, or just want to understand your local market better, I'm always happy to help you. You can reach out to me directly through the contact information in the video description. Let's navigate this dynamic market together. Now, let's address a question that's been coming up a lot lately. Should I buy a new construction home or an existing home? This is a great question, and the answer really depends on your specific situation. Let's break down some pros and cons. New construction pros. Everything is brand new, and you're the first owner. Modern designs and up-to-date building codes, often more energy efficient. Customization options if buying early in the construction process. New construction cons, generally more expensive per square foot. Possible construction delays, may have less character or mature landscaping, often located farther from city centers. Existing home pros, usually less expensive per square foot, established neighborhoods with mature trees and landscaping, often closer to city centers and amenities. You can see exactly what you're buying. Existing home cons, may need updates or repairs. Older systems and appliances might need replacement sooner. Floor plans might be less modern, less energy efficient, and less recently updated. Ultimately, the choice between new construction and existing homes comes down to your priorities, budget, and local market conditions. If you value customization and don't mind potentially waiting for construction, a new home might be the way to go. If you prefer an established neighborhood and potentially lower cost, an existing home could be your best bet. Remember, whether you choose new construction or an existing home, always get a thorough inspection and understand exactly what you're buying. And of course, I'm here to help you weigh your options and make the best decision for your situation. All right, real estate watchers, that's a wrap for today's market update. If you found this information helpful, please give this video a thumbs up and hit that subscribe button. It really helps the channel grow and allows me to keep bringing you the latest real estate insights insights. And hey, if you're watching on a mobile device, why not hype this video? Just tap that screen and let's get this valuable information out to more people who might benefit from it. Got questions or topics you'd like to cover in future videos? Drop them in the comments below. I read every single one and use your feedback to create content that's most valuable to you. Let's do a quick recap of what we covered today. Number 1, pending home sales are up, showing the market's resilience. Number 2, builder confidence is increasing despite affordability challenges. Number 3, single-family home starts are trending upwards. Number 4, mortgage rates are lower than last year but have ticked up recently. Number 5, the choice between new construction and existing homes depends on your specific needs and local market conditions. Remember, the real estate market is always changing, so stay tuned for more updates. Thank you all for tuning in to today's market update. I hope you found it informative and helpful in navigating your real estate journey. Remember, whether you're buying, selling, or just keeping an eye on the market, staying informed is key to making smart decisions. If you have any questions or need personalized advice, don't hesitate to reach out. I'm here to help you achieve your real estate goals. Until next time, this is Andrew Finney, and remember, whether you're buying, selling, or just curious about the market, knowledge is power in real estate. Stay informed, stay savvy, and I'll see you in the next video.